Hello, welcome back. So the Alibaba surge is continuing today, and we're going to examine what is happening right now in Hong Kong, as the stock is actually up about 8%. Now, let's see exactly what the price of the stock is. Like if we go here, you will see that it's currently sitting at about 110 Hong Kong dollars. As usual, we can do the conversion here, and the way to do it is each one of these Hong Kong shares is actually 1/8 of what the US ADR is. So if you're holding Alibaba shares, what you need to do is go like 109.7, then multiply it by 8, and you're getting 877.6 Hong Kong dollars. And then we just do the conversion to USD and see what this means actually. And after the conversion, you will see that 877.6 Hong Kong dollars is actually 112.42 in terms of United States dollars. So the stock is actually going higher and higher. And you will see here in Alibaba's stock tweets feed, there's a lot of discussion going on and many Baba posts over here and talking about how Alibaba is actually doing very well right now, bullish and all that. Start trading $5 plus pre-market. So yeah, we're currently looking at 112 bucks, and so I definitely wanted to make a video and let you know about it. Now, what is happening here? We can obviously use our tool here and see what is going on in terms of the news. And a quick peek here, you will see that in the last month, this is the last month chart, the stock has been climbing over here. You will see that it has some abrupt climbs over here. And if you take a look at the 6-month chart, you see it even more clearly. At some point over here, for example, it was $63. Right now, it's sitting at 112, so it's actually almost 50% higher. And frankly, I anticipate it to continue going on in the next year or so, in this year, I suppose. Now, if you take a look at the stock news, that's our module here. You will see what is happening. Shares of fund-controlled companies, Alibaba, rise after Jack Ma gives up control. There's also an investment here in Turkey. We're going to take a little bit of a look at, on that. And also the fact that Alibaba founder Jack Ma is actually found in Thailand right now. So what is going on here? So Jack Ma, the billionaire founder who disappeared from public view, he's actually in Thailand right now, and you can kind of see him here being in some sort of a restaurant. And so why is this important? It is very, very important because remember, one of the core reasons why Alibaba was down and was crashed basically in the past couple of years was the fact that Jack Ma, actually the founder of the CEO of Alibaba, was actually very vocal about the Chinese government. And he took a little bit of an offensive stance against them. And of course, they didn't like that. And they kind of punished his company. Now it looks like he's kind of getting out of the way. And so these kinds of news where he's not really actively involved, I reckon they are very, very positive news pieces here for Alibaba. Now you will see here that why Alibaba, this article talking about why Alibaba shares are skyrocketing in Hong Kong today, as they are up about 7%, actually almost 8% right now. And that happens because there are news about Jack Ma pretty much sitting control of Ant Group. And we're going to take a little bit of a closer look at this one. But Ma's 10% stake in Ant will drop to 6.2 under the proposed plan, as you'll see here. And the news piece is here from Alibaba that it plans a 1 billion investment in Turkey is actually another interesting piece here. As you'll see that the Chinese e-commerce giant Alibaba Group pretty much is planning a logistics hub at Istanbul airport and a data center near the Turkish capital Ankara. Interesting to see because these kinds of sort of like emerging markets and countries that they have pretty much been destroyed in terms of their economies could be some very, very nice investments here for a company like a giant like Alibaba. But you will see here, like the fact that not only Alibaba, but share prices of other ant-related entities also rising on Monday. So we do know that this kind of rise that is happening today has to do with this kind of news pieces here for Alibaba. And interesting to see, people who have been holding this for a while, seem to be getting a little bit of a, a little bit of a good day finally, a little bit of a good month, I should say. Because the stock has been completely bust in the previous couple of years. And again, if you take a look at our metrics tab here, I have talked about how cheap the company is. Now, lately, the P ratio of the company has been very high because the past few quarters there have been issues with obviously with the net income of the company going down because of various issues, basically Alibaba's Chinese lockdowns. Basically the issues that they had with the supply chains, and also the fact that the company also lost quite some money actually on investments is why you're looking at a very, very high P ratio in the past few quarters, that is. But we do anticipate that this is going to normalize, and I have talked about it in a previous video, which basically brings me to the point of talking about Alibaba being pretty much a great opportunity here because its financials and its numbers over here are pointing to a chip company that had its troubles because of the crackdown, because of the Chinese crackdown, that is, because of the issues in China, basically the lockdowns and everything. But right now it's looking like it's a decent opportunity and actually a pretty good opportunity. And before I basically close this video, you can kind of use our stock evaluator too. Remember, you can gain access to this by becoming a Patreon. It's available to all of our Patreons for pretty much the whole tool. And a link is in the description box below this video if you're interested, by the way, in becoming a Patreon. And what I can do here, the revenue growth that we're expecting for Alibaba is going to be somewhere in the range of like 5, 7, or 9%, I believe. Now, this could obviously change, but we can go with that. This is very, very conservative too, based on the fact that the revenue growth for Alibaba has been in very high levels pretty much in the previous years. But the net income margins have been suppressed lately. Now, these are not expected to continue. This could happen for maybe like one more year or so, but they are not expected to be the average. So I will go for something that is something near the 3-year average, which is a little bit suppressed. So let's go maybe 19, 20, and 21 here. And in all sorts of videos that I'm creating, I'm doing some different types of assessments, different types of projections. It really depends on what I want to check for the day or what kind of analysis I want to do. And of course, by getting access to the tool, you can do your own projections, pretty much use your own numbers. These are pretty much indicative of what the company could do, and it's very fair and very close to what would more than likely happen with Alibaba. And we are looking at a free cash flow margin of near 90 to 100%, very typical. So this doesn't really have something near the 80s, so something like maybe 90, 95, and 100 or even more makes a ton of sense here. And an annual return of 13% points to the company pretty much being very cheap. And again, I have talked in various videos, even the low estimates here, 143 with a current price of 107 for Alibaba. And if we take it to a revenue growth of 0%, and this is the insane part about Alibaba right now, if you take it to 0%, we're still in the green. Now, marginally, because we're looking at 112 probably today, but with a 0% revenue growth, that's a 5-year discounted cash flow model. So basically, without the company growing at all for the next 5 years, it's still a buy today. This is how cheap it is. But that's what I wanted to talk about in this video, a very quick one, just to let you know of the news, because we are going to be greeted with, more than likely at least, you're going to be greeted with a steep increase actually today in the US market. It's probably going to be in the range maybe of like 5%, because remember the stock was adjusting from the gains of Friday, and since this is Monday today, in the Hong Kong that is. And so, yeah, we're potentially looking, I think, at about 5%, maybe 6%. We'll see, unless that reverses, of course, in the US markets. So thank you for watching. Please remember to leave a like, that helps a ton, and subscribe, of course, if you're new around here. And I'll definitely see you in the next video. In the meantime, take a look at this video that I made earlier. And in this one, I'm discussing Amazon and whether it's a potentially interesting buy. I'll see you soon. Bye-bye.